Hello investors. We believe that after about 15% plus rally in Nifty 50 over the last couple of months, Indian equity markets have moved from absolute value to relative value in the near term. In other words, we find pockets of value within the equity market wherein valuations are still reasonable and earnings outlook remains strong. We remain watchful of the global headlines over the next 3 months as we expect meaningful events like the onset of winter in the context of Russia-Ukraine war, the government changeover in China, and the interest rate versus currency quagmire of central banks globally to play out. However, we continue to remain constructive on equity markets from a 3-year perspective. We continue to expect the upcoming result season to be two-faced in nature. While the domestic cyclicals are expected to do well on the back of buoyant domestic demand, global focused businesses could see weakness in the global business scenario. On sectoral front, we expect financials to show robust growth, while commodity-related earnings could see meaningful declines reflective of falling global prices on commodities front. We remain constructive on mid and small cap stocks over the medium term. However, the valuation differential that existed between large and mid and small cap stocks have normalized over the last 12 to 18 months. Going forward, we believe that movements will likely be stock specific and follow the earnings upgrade-downgrade cycle of individual stocks closely. As a share class, they continue to be a strong source of wealth creation for investors with a 5 to 10 year perspective and hence deserves a meaningful part of investors' asset allocation. We are constructive on equity markets from a 3-year perspective. This is driven by our positive stance on the following themes which falls across multiple sectors. First of all, rebound in credit growth. Second, a buoyant private sector investment demand. Third, rebound in household capex demand. Fourth, beneficiaries of government's growth schemes and China Plus One demand. And finally, consumer-facing companies with pricing power. We expect stocks exposed to these themes to do well over the medium term. We think investors should pay close attention to their preferred asset allocation that is commensurate with their return objective. From an FY23 perspective, we think they should focus on bottom-up themes rather than macro themes to generate returns. And happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.